Okay, hi everyone. Give me a sec. Hello everybody. Hi Dean, hi Kenny, hi Roland. Let me see. Okay, to everyone. Hey, can you guys let me know in the chat box if you guys can see my screen, if you guys can see me, if you guys can, hi Dean, if you guys can hear me loud and clear. Let me know if there are any technical problems so that I can fix it before we actually start, because I do not want the problems to be occurring halfway through. Okay, hi Anthony. Hi. Yes, it's okay. Okay, thanks Francisco. Hi Dean. Hi Anthony. Hi Phoebe. Hi Kenny. Hi Roland. Hi Bob. Thank you so much, Dean. I see new names here that I did not see last week. Can you guys just let me know where you guys are from? And also, for those who joined my webinar last week, did you guys get in on that trade? I personally made 5% on that trade last week. I don't know about you. Okay, not 5%. Let me check. I made 4.7% last week on the trade that I shared with you guys on Thursday. So if you guys got into that as well, congratulations. But again, the disclaimer is it was only educational, only get in if you guys agree. But yes, I personally got in and it worked out really well. Okay, cool. It's already 5:01 here in Singapore. I think I can start already. Let me just. Okay. Hi, Dean. How long have you guys been trading for? Do let me know. Don't be shy. If you guys let me know how long you guys have been trading for, then I will know whether to go fast or slow or if I should repeat certain things. Because if you are a first timer, you are gonna have a hard time grasping the concept. If you have been trading for a while, I can go fast and you'll know what I'm talking about. I'm a newbie with 1 year experience in trading. Anyone else? 2 years. Okay, I personally have been trading for 8 years, so whatever I shared you guys today is basically my own trading experience, my own friends, 2 years, another 2 years. Okay, cool. So I guess you guys have been in the markets for quite a while and you would kind of 4 years no success. It's okay. It's okay. I totally understand. Okay, let's go through the webinar today and like hopefully you guys learn something and it helps you in your trading a little bit. But do not be discouraged. Honestly, I did not see success in the earlier time of my trading, but it was also because I wasn't very disciplined. I would keep jumping into trades that didn't make sense. I will keep exiting trades. I will keep over leveraging. I will keep doing things you're not supposed to do. So I know exactly why there was no success with my trading because I wasn't doing the things that is going to help me succeed. So if you are not seeing success, you probably just need to change a little bit of your trading style, and then you should be able to see some results. Okay, so I think everyone is settled in. Hey everyone, welcome to today's webinar brought to you by IronFX. I'm really excited to have all of you here with me, whether you are a complete beginner like some of you or a seasoned trader looking to sharpen your edge, today's session is going to give you valuable insights into the market. So I'm glad I already got to know a bit of you guys. I've got someone from Italy, someone from Singapore, someone, I'm guessing you guys are mostly from Europe, okay? I just want to let you guys know that today's webinar is going to be very, like, let's try to make it interactive. Let's also try to ask questions. I mean, if you have questions, right, you don't have to be shy. Oh, from Africa. Namibia, Africa. Oh, hello, hello. Yes, I do remember you joining the previous webinars. Okay, so this webinar is intended purely for educational purposes. Everything I share with you today, from strategies to tools, is meant to help you understand the markets better. It is not financial advice and should not be treated as a recommendation to buy or sell any specific asset. So trading involves substantial risk, and it's important to remember that past performance does not guarantee future results. Please make sure you fully understand the risks involved before engaging in any form of trading, and only trade the capital that you can afford to lose. Okay, so let's get started on today's webinar. But yeah, before we dive in, let me take a moment to introduce myself properly. My name is Cassandra, but please feel free to call me Cass. I'm an investment analyst at Rocket and also a prop trader. So here we specialize a lot in Forex and equity research, and we've been recognized as one of the top research firms for several running years. Our team is highly trained in trading and investments. We don't just follow the markets, we study them deeply. We conduct rigorous research, back testing, and data analysis, and we often write the very material that other analysts across the region rely on. So as for me, I actively trade as a prop trader, and I have successfully passed 3 prop firm evaluations. Okay, I'm sharing this so that you guys know that you are in good hands. Okay, so for those who don't know what prop trading is, it's not easy. It requires the trader to prove a high level of profitability, discipline, and strict risk management under pressure. So you essentially need to make a profit of 10% within 1 month to pass the test and then to become a prop trader. So I've done that 3 times and I'm doing it again right now. And so far I'm doing okay. Okay, so that's me. If you guys have any questions, don't be shy. I'll just ask. The whole point of this webinar is to learn. Okay, so we're now gonna do part 3 of 4 parts of Fibonacci Masterclass. And this session is all about Fibonacci extension. So far, we've covered Fibonacci retracement in part 1 and Fibonacci expansion in part 2. In this session, we're gonna explore how Fibonacci extensions are used for project future price targets, identify potential take profit zones, and understand how far the trend might run after a retracement. So again, just another reminder on the disclaimers, whether you're trading Forex, commodities, or crypto, this is one of the most practical tools in the trader's toolkit, especially when used with the right structure and confluence. So just a quick reminder, everything we're going through today is educational purpose only. None of what we cover should be considered as financial advice. Please trade responsibly and always assess your risk before making any decisions in the market. Okay, cool. Let's move on. Our agenda for today will be an overview, okay, and recap of what we did in part 1 and part 2. We're gonna break down what is this tool, what Fibonacci extension is, why does it matter, and why it fits into the real world of trading. Okay, so the important Fibonacci extension ratios ideal market structure. So because this tool only works well in certain conditions, I'll walk you through what to look out for, and then we'll do intensive practice session, okay, so that you can apply what you've learned immediately. And before I continue, I just need to do a quick check in here because I need to know who did not attend part 1 and part 2. I'm guessing Dean did not attend part 1, part 2 because you're saying this is your first time attending IronFX webinar. I know Phoebe, sorry, I don't know if I'm pronouncing your name correctly, Foibe, but I know you were here during part 1, part 2. For the rest of you, were you guys in attendance for part 1, part 2? Because if you were not in attendance for part 1, part 2, you are not going to understand what I'm saying for part 3. Just let me know in the chat box so I know. Yes, I did attend. Yep, I do remember you attending. The rest of you, Alex, I remember Alex attending as well. Anthony, your name seems familiar, but I'm not very sure. Okay, so I think because some of you did attend, some of you did not attend, I'm gonna do a recap again on part 1 and part 2 so that you guys are clear and you know what to do. Okay, so overview and recap. Before we do the overview and recap, this is a checklist that you guys might want to follow whenever you are trading. Basically looking for horizontal levels. Hi, Alex. Are there any trend lines, channels? Are there any patterns? This is a checklist that I use whenever I am looking for a trade setup. If you already took a photo of this, will there be another series on Fib Masterclass? Yes, there will be one more session of the Fib. So it's a 4-part series, and we already did part 1, part 2. We're doing part 3 today, and then we're gonna do part 4, I think, next week. Okay, so next week or the week after, I cannot remember. But yes, there will be a part 4. Okay, so for the new traders, I do encourage you to take a picture of this. Dean, especially, or Brian, Bob, especially, I do encourage you guys to take a photo of this because this will help you in your trading. Okay, so you need to ask yourself, are there any horizontal lines? Are there any trend lines, channels, chart patterns, dead crosses, natural moving averages, stochastics, RSI, correlation, and etc., etc. Okay, good. I'm gonna move on. I'm gonna assume you guys already took a screenshot. Gonna move on. Okay, so this is part 1 and part 2. So there are certain rules that you need to do. I'm gonna have to pull out my pen, sorry. I'm gonna have to pull out, oh, what happened? Okay, I'm gonna have to pull out my pen because if I don't pull out my pen, I won't be able to explain thoroughly what I'm doing. Okay, cool. So do you guys remember how to spot a retracement on the charts? If you guys let me know in the chat box so I know that, if you guys can let me know in the chat box, that'll be good. At least I know that you guys were following. Hello, Jamilu. How is it going? Okay, anyone at all? Anyone remember how to spot a retracement on the chart? Hi, good day to you too. Okay, cool. So no answers from the chat box. I'm assuming you guys swing high or swing low. Yes, thank you so much. Okay, yes, so you do need to spot a swing high and a swing low, but more importantly, you need to spot, sorry, my bottle is in the way. You need to spot this pattern on the chart. So you need to spot a V looking pattern that has not complete. So this is where 0 is. Okay, right? This is where 0. Sorry, that's not where 0. That's where 100 is. This is where 100% is. This is where 0% is. You pull out your charts. you need to find a V pattern that has not reached 100%. So it looks like, it could look like this. 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 As long as this part has not reached the beginning point of the last swing high, that is called a retracement. Okay, so it is retracing. It is literally in the word. It is retracing from where it started. Okay, so it's retracing from where it started. Okay, so on the charts, you need to find a V-looking pattern. Do you see that? A V-looking pattern. You need to take the swing high and then the swing low on TradingView, and then a few lines will appear. Okay, so that is retracement. So for retracements, there are 5 levels that we need to focus on. Okay, 5 levels that we need to focus on. Just give me a sec. I just want to check if my other charts. Just give me a sec, guys. Okay. I'm gonna delete everything because I didn't realize I already had everything written down. Okay, cool. So this is what we learned the first session. This is what we learned the second session. Sorry, I'm gonna go into detail in a moment. This is what we're gonna learn today, which is extensions. And then this is what we're gonna learn today, which is projection. I mean, sorry, next week or the week after, which is projection. Okay, so they all have different characteristics that you need to remember. It will help you in your trading. And this is confluence where you combine everything together. Okay, so retracement. We did retracement a couple of weeks ago. That is part 1. Okay, that is part 1 of our entire series here. There are 5 key levels. You need to find a V pattern with a shorter end. Okay, so this is a V pattern with a shorter end. You guys see that? There are 5 levels to look out for: 23.6, 38.2, 50%, 61.8%, and 78.6%. Please remember this, okay? Throughout the webinar, I'm going to ask you guys to make sure you guys are following me. If you guys cannot remember, please write it down somewhere. Please take a photo, something. Okay, so the levels are between 0 to 100%. That means it ranges from here to here. 100% starts from the swing high and 0 starts from the swing low, okay? Please remember this. If you can remember this, it will help you tremendously in your trading. Okay, and I will be asking you guys throughout the webinars again as well, so that I know you guys are following. I know if you guys are following. Okay, so let's move on. This is the expansion, which is what we did last week or the week before last week. Basically, expansion, you need to find an end pattern. An end pattern. It focuses on negative levels below 0%. The third point cannot be longer than the first point, and point 3 must retrace at least 50%. So you see there is an end pattern on the chart. End pattern on the chart. This is point 1, point 2, point 3, and point 4. So from point 2, from point to point 3, it must retrace at least 50% of point 1 to point 2. Okay, so let's say, I'll give you guys a very clear example. Let's say this price is at $1. $1. It's moving, it's moving, it's moving, it's moving. It reaches $5. Okay, it reaches $5 here. This is $4. This is $3, and this is $1. Okay, 50% of $5 is $2.50. So price needs to pull back to at least $2.50 for it to be a valid expansion. Okay, you guys, are you guys following? Do you guys understand what I'm saying? If not, just let me know in the chat box, and then I'll repeat myself and I'll try to simplify it more. You guys get it? we'll pretend that this is $10 here, and this high here is $20. Okay, price needs to at least pull back to $15, which is here, which is the halfway mark, for this to be a valid expansion. Everyone understand? An expansion will give you an N pattern, which this one shows a very beautiful N pattern. 0.3 cannot be longer than 0.1. Okay? So the N must look like this. It doesn't, you know how you normally draw an N? I normally draw an N like this, right? No, this is wrong. The N must be like slanted to the side. It must look like this. 0.3 cannot be longer than 0.1. Okay, so I think this is very clear. There are two levels to look out for, negative 27.2 and negative 61.8. Negative 27.2 and negative 61.8. Okay, cool. Everyone following? Okay, we're gonna move on to today's topic, which is what are Fibonacci extensions? Okay, brief history, not important, but at least you guys know what's happening. Okay, so Leonardo of Pisa, or also known as Fibonacci, okay, he introduced the Fibonacci sequence to the Western world. The sequence naturally leads to the golden ratio of 1.618, which has been found in many natural patterns. So in trading, the 1.618 Fibonacci extension is one of the most important levels used to forecast price target. Okay, so you can use it to get in for your entry. Okay, you can use it to get in for your take profit. So Fibonacci levels are now a core component of technical analysis, helping traders predict potential price reversals or extensions in the trading market. Understanding Fibonacci extensions is essential for any trader looking to spot key levels for entering or exiting trade based on natural price behavior. So psychologically, price tends to go to 1.618 level, and then it tends to it's attracted. Okay, so what exactly is a Fibonacci extension? Let's talk about it. It's one of the most widely used tools in technical analysis for identifying potential price targets during a trending market. A Fibonacci extension is a tool that traders use to forecast how far a price might move after a retracement. In other words, once a market pull back, where could it possibly go next? Okay, so it's based on the ratio derived from the Fibonacci sequence, particularly the golden ratio of 1.618 and its related multiples. These ratios are applied to price waves, helping traders pinpoint where the markets might find resistance and support, and most importantly, where to take profit. So unlike Fibonacci retracements, which measures pullback, remember Fibonacci retracement is 0 to 100. So it measures pullbacks within the 0 to 100 range. Fibonacci extensions looks forward instead. So projecting possible price expansion levels beyond the previous swing highs or swing lows. This makes them especially useful for traders looking to ride trends and determine realistic target levels. Whether you're trading Forex, crypto, stocks, or commodities, Fibonacci extensions can provide a framework for understanding how far the move may go, not based on random guessing, but on market psychology and natural mathematical patterns. In the upcoming slides, I'll walk you through the key extension levels, the patterns to look out for, and how to apply the tools effectively in your own trading. Okay, so the uses for extension, same as retracement and expansion, is for entry, take profit, and stop loss, in addition to other technical analysis. Of course, you don't just use Fibonacci on its own. You need to combine it with support and resistance. You need to combine it with indicators. You need to combine it with like trend lines and whatnot. That's why I gave you guys this checklist, because this is what you're supposed to combine. You're supposed to combine everything in this checklist to find a very profitable trade. Okay? So we've got that. Important Fibonacci extension ratios. There are two key levels, 127 0.2% and 161.8%. Okay, please remember, is extension and expansion the same? No, expansion is this. Expansion is the one where I was talking about, you look for the N pattern. Extension, I'm going to explain now how to identify it. Okay, just give me a sec. Okay, so extension, let me see, yeah, it's in the next slide. Okay, so there are just two levels. Every kind of Fibonacci retracement has 5 levels, remember. Those 5 levels are 0 to 100. Expansion has 2 levels, remember. Those levels are negative levels. So negative 27.2 and negative 61.8. Extensions are levels above 100%. So you notice how they differ. These are levels above 100%, and these are the 2 levels that you want to look out for. Guys, if you cannot remember, do not worry. I cannot remember either. That's why I write it down. I write everything down so that I can come and reference later. Okay, so expansions are levels above 100%. Let me move on. And it is a Nike tick pattern. You guys know the shoes Nike, right? I don't know if I'm drawing it right, but yes, basically Nike, right? So it has a Nike tick pattern. If you guys can see on the charts, you see how it's doing a very nice Nike tick pattern. Why do you need it to do a Nike tick pattern? Because the levels are above 100. So remember, okay, let me just erase everything. Okay, we'll let this video finish playing and then I can show you guys why. Okay, come on, come on. This video is taking a while. I'm so sorry, guys. Maybe I should just go back and come back. Okay. Why does it have to do this? Because remember, here is 100%, right? Here is 0%. For it to go above, for it to give you the 2 levels, which is 127.2 and 161.8, right? It needs to cross this 100% mark. That's why it forms this Nike looking pattern, like a tick pattern. Okay, Nike tick pattern. Then that's when you know it's a Fibonacci extension. Okay, so how you can use it, you can see we first identify the Nike tick, and then now we pull out Fibonacci. We plot Fibonacci. For those who don't know how to plot Fibonacci, don't worry, we're going to live charts. I'll show you how to do it. You pull from the swing high to the swing low. The levels is going to appear. You see 127.2 is here, 161.8 is here. Price moves up exactly at 161.8%, and then it starts reversing. Do you see? It starts reversing. That is where you get in for a sell. You get in for a sell here. You get in for a sell here, and then price moves here, and your take profit is somewhere along this line. Okay, so you would have made good profit using Fibonacci extension. That's why it is important to master Fibonacci extension. Okay, so let's move on. Ideal market structure, again, it is the Nike tick pattern. This is basically the same video. Okay, so intense practice session. Okay, I'm done. I'm done with the slides. Let me pull out the charts. Because the thing is, okay, the thing is, Fibonacci is a very simple topic, but you need to practice, right? You need to practice. Okay, I am going to pull up, where's my charts? I'm so sorry, guys. I lost my charts. Okay, this is my charts. Can you guys see my charts? If you can, let me know in the chat box. Everyone can see my charts? Oh, would you look at that? my trade playing out nicely. Okay, yeah, I'm gonna get rid of this. I'm gonna go to another chart. This is my trade for today. It seems to be working out quite well. You can see how I use Fibonacci to get my trade. I combine Fibonacci and other things to get this trade, right? Oh, Jamilu, I saw you on Monday. Oh wait, yeah, I spoke to you recently, and this was my trade when yeah, you last saw me, and it's working out pretty well, to be honest. Okay, let me go to another EURUSD so that we can do the practice session. Why is my E not working? Okay, there you go. Okay, let's use this chart. Yeah, let's use this chart. Okay, so can you guys let me know again in the chat box how to spot Fibonacci retracement? Sorry, no, that's the wrong question. Okay, the question is, from this place that I mark, what Fibonacci type do you see? Do you see A? I'm going to type it out. Sorry, my handwriting is A, a fib retracement. B, a fib expansion. Or C, a fib extension, which is what we just learned. Okay. I see people saying fib extension. I see people saying fib expansion. The only one who got it correct is Jamilu, because Jamilu has been trading for a long time, right? Jamilu has been following a lot of my webinars for years. Okay, so I would expect Jamilu to get it right. But anyways, the answer is A. It is a fib retracement. You guys must be wondering why it's a fib retracement. Remember, I said a fib retracement needs to do a V pattern, right? The level needs to be 100% and 0%. It needs to be within. There's no audio. There's no audio. Hello? Can you hear me? Is it just one person, or can everyone else hear me? Is it not working for everyone? Can you guys hear me? My E is not working. Sound is okay. Okay, let me just type this out. Hold on. Everyone, my E is not working. Okay, so everyone seemed to be able to hear me, so I think it's just your audio, maybe. No, I can't hear you. Okay. Everyone see maybe audio, maybe your speaker. What happened to my E? Okay, I'm just gonna leave it to. Okay, cool. Thank you so much. Okay, you can hear me now. Okay, so you guys are wondering why I chose A. Because Fibonacci retracement can be the other way around as well. Okay, it's the same as expansion and extension. So expansion will look like this or like this. Extension, which is the Nike pattern, will look like this, or it will look like this. Okay, so it can also be inverse or the other way around. So based on this is A, this is B, and this is C. This is a Fibonacci retracement, okay, because it is doing this. Okay, so if it's not clear, let me show you guys. You're gonna get this pattern here, which is a Fibonacci. This is the 100% level, and this is the 0% level, okay? If it's not clear still, let me show you how to use the Fibonacci tool. You're gonna go here, 1, 2, 3, the third one. Under Fibonacci, you're gonna press Fibonacci retracement. You are gonna press on the lowest point that you see, the lowest point of the swing low, press on it, pull it to the highest point of the swing low. Okay, we're gonna mark the 0 and the 100 so that you know what I'm talking about. 1 stands for 100%, okay? So 1 stands for 100 and this is 0, okay? So can you guys let me know in the chat box what are the levels to look out for Fibonacci retracement so that I know you guys are following me? There are how many levels to look out for in Fibonacci retracement and what are they? Can you guys let me know in the chat box? You should have screenshot it or wrote it down somewhere earlier on. The starting point is always 100%. That is correct. That is correct. Okay. Thank you. I'm waiting for someone else other than Jamilu to answer. I know Jamilu is going to get it right. Anyone else? Wait, can you guys see each other's replies? I'm confused. Like, can you guys see each other's reply? If you guys can see Jamilu's reply, then there's no point of me waiting anymore. Okay, so Jamilu is correct. I'm seeing that no one else is replying. There are 5. Thank you so much, Alex. Thank you so much, Dean. Okay. You guys are following me. Thank you so much, Phoebe. I am so happy you guys are following me. No, if you guys, like, if I ask question and you guys are able to answer, it makes me feel good because it's like, okay, at least I'm teaching you guys something and you guys are like absorbing the information. That means like my teaching is not bad, right? I can't see other people's reply. Okay, cool. Okay, so 23.6. So you're going to click on all the levels that we talked about, which is the 5 levels. 23.6, 38.2, 50%, 61.8%, and 78.6%. Okay, so remember, I'm going to remove the drawing so it's clearer. Remember, the reason that you use Fibonacci levels is to predict where price is going to bounce off. If you think price is going to bounce off this level, you can prepare to get in for a buy at this level. You know what I mean? If you think that price was going to bounce off this level, you can prepare to get in for a buy at this level. Okay, so let's see where current price is. I'm going to go back into this thing, double click on it. 23.6 that is not relevant anymore because price already cut through 23.6. So 23.6 is out. Price cut through 38.2. So 38.2 is out. Cut through 50%, right? This is where price is cut through. That means price does not respect this level. Price does not respect this level means that that level is irrelevant to us. Okay, so 61.8. So the last level left is 78.6. Okay, so because all the others are not relevant to us, right, I'm going to delete the other levels so that the chart is clean and like nice and we can see it very nicely. Okay, I'm going to get rid of this. Okay, cool. Let me get rid of 23.6. I'm going to get rid of the 0 and 100. You guys get the point, right? The point is that the starting point is always 100%. Okay, so I'm just going to get rid. So the only level left is 78.6. So we can expect price to come here. And then from here, we can get ready for a buy. If you guys saw my setup just now, I already got in at a buy here. I already got in at a buy somewhere along this line. Why? Because other than using Fibonacci, you can combine it with other techniques, right? Which I cannot teach you in this webinar because this webinar is only 1 hour long, okay? if we have like, that's why you have to attend every week so that you can learn different things that you can combine together and use it together. Okay, so today I can only teach you guys Fibonacci, but basically based on Fibonacci double bottom pattern. Double bottom pattern, let me Google. I don't remember. Double bottom is the W pattern, right? Yes, the W pattern. Let me see. Do you guys see the W pattern? I don't really see the W pattern. Do I need to zoom out? Yeah. So yeah, I don't really see it, but I don't really see the W pattern here. But that is a good point. That's why you can combine. Let me pull up my cheat sheet again. My cheat sheet, my checklist cheat sheet. Sorry guys, give me a moment. That's why I'm telling you guys you need that cheat sheet so that you know. I'm sorry, I'm gonna get rid of this. You know what you can combine. Okay, so this is the checklist that I use. I am a profitable trader and I use this checklist. So you guys should consider using this checklist. Okay, this is the checklist, right? That's why, yes, you can combine it with other patterns. I don't see the double bottom that you are talking about, but you can combine it with other chart patterns that you see, okay? You can combine it with other chart patterns that you see. Where is my charts? Okay, there you go. Okay, so we expect price to bounce somewhere along this area, and then that's where we enter for a buy, right? Somewhere along this area, and that's where we enter for a buy. Okay, why did I mark this whole zone? Support and resistance is never, oh my gosh, I lost the chat box. Okay, there you go. Support and resistance is never a single price. Okay, it is not a single price. It is always a zone. That's why I drew out this box. So you can see in this zone, the 78.6 lies very nicely in this zone. Okay, why did I choose this zone? Because price came here one time, two times. See, price came here one time, two time, and the third time, and this is where I entered for the buy. I'm probably gonna take profit soon, but yes, this is exactly where I entered for the buy. But that's how you combine different things together. So right now we're only learning Fibonacci. So let's just stick with the topic for today. You need to learn all the other stuff before you can combine it. I can only teach you one topic at a time because these webinars are only 1 hour. Okay, cool. So then we expect price to bounce off at this point, and price kind of did bounce off this point. Now, it's a practice session, so let's continue looking for more examples. Okay, I'm gonna replay to this zone. Can you guys let me know in the chat box if you see A, retracement, B, extension, and C, expansion. Sorry, extension is what we just learned today. In this area here. This area that I drew here, what patterns do you guys see? Can you let me know in the chat box? Thank you. I've already got correct answers coming in. Thank you, thank you. At least you guys are following. Can you guys let me know? I've already got some answers coming in. Okay, thank you so much. Thank you, Dean. Thank you, Alex. Thank you, Emmanuel. Okay, I know Jamilu wants to reply, but yeah. Okay, so this is a Fibonacci extension. Okay, some of you said expansion, but it's actually an extension. Okay, extension is what we learned today. Sorry, I tricked you guys. I put extension and B, but extension is what we learned today. So extension, remember the pattern is a Nike tick. A Nike tick pattern. Can you guys let me know the levels for extension? Can you guys let me know the levels for extension? Nike tick pattern. Can you guys let me know the levels for extension? There are 2 levels for extension. Let me know in the chat box. Jamilu already got it right. Just want to make sure the rest of you are following. I need one more level. Thank you so much, Dean. Thank you, Emmanuel. Thank you, Jamilu. You guys are following. This is important. I know it's very silly. It's like I'm testing you guys, but trust me, this will help your trading so much. Okay, so why does it go beyond 100%? Because remember, the starting point is always 100%. So the starting point is here. I'm now going to pull out the Fibonacci tool, third one, Fibonacci tool. Press on the starting point. I mean, technically, yeah, I'm going to take this last swing high. Click on it, pull it down to the swing low, click on it, go into the settings, get rid of everything, pull out 0 and 100 so you understand what I'm talking about. See, 100 is always the starting point. So when it's 127.2 and 161.8, it will go beyond the starting point. Okay, so 127.2, 161.8. TradingView has already set up all these levels for you because these are levels that are frequently used. For retracement, these are the 5 frequently used. For extension, these are the levels that's frequently used, and then so on and so forth. Okay, so that's why you see like, oh, how come TradingView already have set up all these levels? Because they know. Okay, so price has already crossed 127.2, so it's not relevant to us anymore. I'm going to get rid of 127.2. Right now, price is at 161.8. Let's play. Let's play the chart and see that the price respect this area. Let me draw a zone to see where I think price is going to return. Okay, I think just a very, very rough analysis based on Fibonacci extension, price should respect this area here. Okay, somewhere along this line here. Okay, let's see. I'm combining Fibonacci and support and resistance, by the way. Okay, let's see. Oh, look at that. I did not plan this, guys. I literally just randomly chose a spot, and you guys can see how well it worked out, right? You can see how well it worked out. Exactly at the 161.8 point, price came here, and then it starts reversing. Oh, that is so cool, actually. I did not plan this, by the way. I just randomly chose a spot. I did not expect it to play out. But yes, that is magic, technical analysis, yes. Okay, cool. So if you are in a short trade, you get in here for a sell. Your take profit will be here. Here, this next zone here. Somewhere around here to here, which is this next zone. And your stop loss will be somewhere around here, right? So if you got in, okay, let's say you got in here, which is somewhere below. Okay, you got in here, your take profit is here. Hey, what happened to my templates? Oh yeah, there you go. Take profit is here. You got in somewhere around here. Sell entry, and your stop loss is somewhere around here. Okay, that's a very big stop loss. I usually put it just above the zone, slightly above the zone. Okay, you would have made 2%. Okay, you would have made somewhere around 2%. Yeah, somewhere around 2% for this trade. Okay, so if you're risking $100, you would have made $200. If you're risking $1,000, you would have made $2,000. The power of support resistance with Fibonacci confluence, yes, so powerful, made me so much profit, will make you guys so much profit as well. Okay. Oh, yes. By the way, I got in my trade here. Price is like, I'm in quite a bit of profits right now, to be honest, with my trade. Okay, cool. So let's continue practicing. I want to continue practicing so that when I'm not around, you can still do it yourself. Let me find another example. I am not planning any of this, by the way. So, okay, I see one good example here. Oh, I lost it, sorry. Let me see one good example. Okay, here. No, sorry, I need to play it a bit more forward. So let's say you open the charts, right? You open the charts and then you see this part here. You see this part here. Can you guys let me know in the chat box what pattern this is? What Fibonacci should I use to plot this area? Could you have possibly have gone above that level? Could the price have? Yes, it's definitely possible. There is nothing that is 100% in trading, right? There's nothing that's 100% in trading. It is just more likely. So if you plot those levels, it's just that more likely price is going to reverse from there. But there is still a possibility that price is going to burst and go above that level. Yeah. So trading, right? What it is your only job as a trader is to collect data, make a decision from the data you collected. That is your only job as a trader. So based on the data that I've collected, price is supposed to reverse at 161.8%. But let's say it goes above and I am wrong, that's totally fine. It hits my stop loss, I lose money, and that's fine. There is nothing to be sad about, there's nothing to cry about because you are just acting based on data. Is Fibonacci useful in scalping gold? Yes, it is. I am a gold trader. I use a lot of Fibonacci. Okay, so do let me know in the chat box again if this is A, retracement, B, sorry, extension, C, expansion. Let me know ABC. I've got answers coming in. Expansion, retracement, extension. So many answers coming in. I want to show you guys something really cool. I want to show you magic, you know what? But yes. Okay, we have not complete the 4 parts of this series, but remember one part we were talking about confluence. Confluence is basically combining everything together. So when I look at this chart, I see multiple. Yes, as usual, Jamilu is correct. Because you've been following me for years. You've been trading for a long time. Yeah, Jamilu is correct. Okay, so I see a Fibonacci extension here. Remember, a Nike kick pattern. It just needs to cross the 100% mark. So this is the 100% mark. Price has crossed above it. Okay, so this is an extension. B is correct. And you should be also able to see an expansion, right? Remember, expansion, it needs to go to a high and pull back to at least 50%. So let's see if it pull back to at least 50%, pull from the swing high to the swing low, pull up the 50%. Yeah, so 50% is here, price pulled back to at least 50%. So there are 2 answers to this, okay? B and C. And guys, if I zoom out, right? If I zoom out, this is also actually a retracement. You need to train your eyes to be able to spot all of this because this will help you gain so many profits. So much profits, sorry. So many, so much, yeah. This is also a retracement. This is the 100% mark, this is a 0, and this is where price retrace. That's why zooming in and zooming out will show you guys your answer. But yes, to answer my question, I only asked you guys this part, right? I asked you guys, what do you see in this part only? Okay, so the answer is there is an expansion here. There's also an extension here. So you can plot both. You can plot both of it. Let me see. Okay, so to plot the expansion, we need 3 points. Point A, point B, point 3. We are going, wait, sorry, I'm gonna draw it. The N pattern, point 1, point 2, point 3, and then point 4. We are gonna take this point 1 and point 2 to chart point 4 to predict where point 4 is going to end. Again, go into the Fib retracement tool, click on it, swing low to the swing high. Can you guys let me know in the chat box what are the levels to look out for Fibonacci expansion? The N pattern that you see, what are the levels you should be looking out for? Let me know in the chat box. Thank you, Emmanuel. That is correct. Let's give a chance to everyone else. Thank you, Jamilo. Correct as usual. Rest of you, are you still following? Thank you, Dean. Thank you, Phoebe, for answering. Okay, the answer is correct, but it needs to be negative. Okay, so it is negative 0.272 and negative 0.168. Sorry, negative 0.618. Okay, so these are the levels where we expect price to go to. We either expect price to go here, here, or here. Okay, we don't know yet. We don't know yet. That's why we need to use other things to combine so that we know. Okay, so now because we also see a Fibonacci retracement, we are going to pull out a Fibonacci retracement. Okay, let me know in the chat box really quickly what are the levels. Actually, sorry, we don't have time anymore. It's only 5 more minutes. I'll tell you the levels. Okay, this is not working out. What I wanted to see was price doing this. I wanted the 127.2 and the negative 27.2 to be in the same area, because if it's in the same area, we know there's a high chance price is going to go there and reverse. Okay, so now they're kind of scattered. That's totally fine. They're scattered. We cannot force the charts to look like how we want it to look. Hey, so now, because we already saw the retracement here, I'm going to still use the retracement. I already saw the retracement, so I'm not going to pretend that it's not there. Okay, so I'm going to use the Fib tool again, and then we're going to find the retracement. I'm going to plot the levels. 1, 2, 3, 4, 5. Okay, I'm going to get rid of all the ones that are not relevant to us and leave the ones that's relevant to us. Okay, do you guys see how negative 27.2? Can you check projection? Oh, I can check projection, but they wouldn't understand because we haven't gone through projection. Okay, so projection is a topic we're going to cover next week, but it's okay. It's okay. I can just use it now. Yeah. Okay, so projection is supposed to be is slightly above that. I'm going to get rid of projection. It's a bit too far. Okay, can you guys see how negative 27.2 is lined up here? This 78.6 Fibonacci retracement is lined up here, and this 127.2 Fibonacci expansion is lined up here. So it makes me feel as a trader that this area here, because there's so many Fibonacci levels here, is an area to look out for. Guys, I don't know if I'm wrong, correct or wrong, by the way. This is my first time charting this. So if I get it wrong, I get it wrong. But if I get it right, this is exactly how you use Fibonacci. I'm going to get rid of negative 61.8 because there are no other levels lining up near it. So I feel like price is not going to go there, right? I'm going to get rid of this 161.8 because it's so far from the other level. So it makes me feel like this level is where price is going to come to. On top of that, I guess I do see like a lot of zones here. I do see like resistance here. So I think what I think is going to happen is price is going to come somewhere along this line and then reverse. I don't know where exactly it's going to reverse. But I think I'm gonna mark this zone as blue. Yeah, that's a very big zone, I know. I know it's a very big zone, but the whole point is to find a zone, and then you don't know where in that zone price is gonna reverse, right? Because price can reverse here, 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 here. As long as it's within the zone, price can reverse anywhere, right? But that's why you use Fibonacci and you use other things to narrow down where you think price is gonna reverse. So I think price gonna reverse somewhere along this green box. More likely it's gonna reverse somewhere along this red box where the Fibonacci is. Let's see if it's correct. Okay, it didn't reach. Or did it? Let me see. Okay. Uh, was wrong this time. But yeah. So based on Fibonacci, ideally ideally what I expected it to happen was price reversing within this red box here. Okay. It reversing within this red box. It didn't reverse, and that's totally fine. If you put your sell order here and then you got it wrong, that's totally fine because you are just making your decision based on information that you collected. I didn't get into the markets based on emotion. I got into the markets because the charts showed me that this is a important zone. Okay, but in this case, it was wrong and price went up and probably hit our stop loss. And then I don't know what's gonna happen next. Let's see. Yeah, now it's gonna go down and up. Okay. Okay, do you guys see that? Do you guys see what just happened? Okay. What we expected price to do was to come up here and then reverse, right? Right? That's what we expected price to do. But that's why you need to combine it with different things. That's why you need to pull out that checklist. So that checklist, you need to pull out trend line. Price is going in an uptrend. That's why it didn't really do a sell, right? It didn't really do a sell. We are supposed to be looking for a buy rather than a sell. So do you see how price came here? It broke this, but it continued to use this zone here. It continued to use this red box as a resistance. I'm gonna zoom in so you guys can see what I'm talking about. Price broke this area, it comes here, it rejects, it goes back up, it comes here, it rejects, it goes back up, it comes here, it rejects, goes back up, rejects, goes back up. Does this fake thing, does this fake out, comes back and reject this box again. So even though we were wrong with the sell, in the end, this box could have been used for a buy. You know what I mean? This box was still significant. You could have used it here for a buy entry. You could have used it here for a buy entry. Yeah. So that's why Fibonacci is so important because it is to mark levels that price will most likely go to. Okay, guys, that's all I have for you guys today. Next week or the week after, I cannot remember. I know I'm doing the last part with you guys, part 4. I am doing part 4 with you guys, which is Fibonacci projection. And then I'm going to show you guys how to combine part 1, part 2, part 3, part 4 together, like what we did today. We combined part 1, 2, 3 together. It didn't work out, but yes, it ended up becoming a resistance. And then we can look at the chart. So next week or the week after, I'm gonna do the slides very quickly so that we can come on the charts and practice. Because I can go through all the theory, I can teach you this and that and this. If you do not practice, you do not understand what I'm saying and how it's gonna work out. Okay, so thank you so much. Thank you. Let me see who's here. Thank you, Alex, Anthony, Dean, Emmanuel, Brian, George, Phoebe, Francisco, Francis, Jamilu, nice seeing you here. Kenny, Cleon. Oh, hello, Cleon. And Roland, I will see you guys in a week or the week after. I just cannot remember when I'm taking you guys again. But yes, I will see you guys to do the last part. And hopefully we do some back testing and we can make some profits. Oh yeah, by the way, what I just did when I used the replay button to go back to test things out, that's called back testing. For the new traders here, please do back testing you do back testing on a chart 100 times, like EUR, USD, do it 100 times. Practice your strategy 100 times. If it works out 60% of the time, it is a good strategy to use. You are going to be profitable. I do backtesting on XAU USD and EUR USD. I am very profitable on XAU USD and EUR USD because I do so much backtesting on it. Okay, thank you guys. Take care. I will see you guys in a week or two. Okay, let me figure out how to get rid of this. Madam, do you have record video on YouTube? They should put this on YouTube once it's recorded. Thanks for the EU trade last week. No worries. EU trade last week, I made 5%. I don't know how much you guys made. Last week, I ended the week with 7% profit. Actually, 6.7% profit. It's a good week last week. This week, I am currently, it's Thursday. It's a bit slow. It's a slow week. Oh, sorry, it's Wednesday. It's a slow week because I only got into one trade this week. I am currently 1% in profit. Okay. I can use Fibonacci in scalping. Yes, you can, and you should. Okay, bye guys. Take care. How do I get off this?